Another blowout jobs report, U.S. economy adding 272K jobs, and GameStop stock plunges as Roaring Kitty reappears. That's coming up today on Business Matters. Good afternoon, and thank you very much for being here with me today. I'm your host, Don Ma. We're starting with Wall Street. Stocks ended mostly flat today. It was a choppy trading session after stronger than expected U.S. jobs data released. More on that in just a moment, but S&P 500 lost 7 points, or about 0.1%. The NASDAQ lost 40 points, about 2.2%, and the Dow here lost 87 points, or as well, 0.2%. Now, the benchmark S&P 500 slipped right after the U.S. jobs data, and Treasury yields as well rose. Now, traders are slashing bets on a September rate reduction. Right now, in fact, no one expects the Fed to cut rates next week. And let's talk a little bit more about that jobs report. Growth exceeded economists' expectations in May. According to data released today by the Labor Department, the month saw a total of 272,000 jobs. That's much more than the 180,000 that economists had expected. The bulk of May's job gains were in government and service industries like healthcare and social assistance. And through May, the U.S. economy has added an average of nearly 248,000 jobs per month. That's roughly in line with the job growth seen last year. Meanwhile, wage growth for workers picked up for the first time in months, according to the report. And to help us better understand today's jobs numbers and what to look out for the labor market in the short term and long term, I talked to Danielle DiMartino Booth. She is the CEO and Chief Strategist at Quill Intelligence. Danielle, thank you so much for your time today. So, U.S. economy adding 272,000 jobs last month. So, I mean, that's the headline number everybody's talking about, right? That blew past expectations. Give us what you think.
Yeah, it was pretty extraordinary. It was a 4 sigma beat, which is kind of statistically way out there on the tail, so to speak. And it was a diametrically different picture than which was painted by the other household survey, which showed us that the unemployment rate rose to 4%. So we're hitting that 4% bogey for the first time in 27 months, as we're seeing job losses come through a much better, much more comprehensive survey.
Right. It ticked up to 4%. I mean, I still remember when it was at the lowest threes. That was a while ago. But are we seeing sort of a trend here with unemployment?
We are indeed. The lows that we saw, that was 3.4%. So we've had a 0.6% move increase in the unemployment rate. That typically signals that we're in recession. And in fact, when you look at revisions to the payroll data that have come out subsequent to long ago releases for the third quarter of 2023, we indeed have seen that job creation in the 3 months ended September the 30th, 2023, was actually not 640,000 with a plus sign in front of it, but negative 192,000. So that's why we think recession probably started in October of last year and will be backdated to reflect that.
For today's job support, more than 500,000 fewer full-time jobs in May. Tell us what that means.
So 624,000 full-time jobs were lost. I believe about 286,000 part-time jobs were lost. Just before we started taping, I said that credit card spending had contracted. We almost never, ever see that, but it's a reflection of the fact that if you're destroying full-time jobs and creating not even as many part-time jobs in their place, people's paychecks are shrinking and aggregate income is contracting, and that's indeed what we're starting to see with a lot of the spending data. So it's certainly not the same thing to create the job of an Uber driver, for example, compared to that of somebody who's making 6 figures sitting behind a desk in a professional job.
And speaking of which, job gains were concentrated in healthcare, government, and leisure hospitality. So government jobs added was around 43K. I mean, what do you have to say there?
Well, the government has been one of the steadiest sources of job creation over the last year. In many large states like New York, for example, 2023 saw net contraction in the private sector job market, but it saw more than enough offset with government job creation. These are not the kind of jobs that we want to see being created. We want for the private sector in the United States to be the main engine of job creation, and that's just not been the case.
All right, given everything that is being said today, I mean, what is the state of the labor market in your view right now?
In my view, the labor market is in recession, and that is what we find out every month that passes by, that the Bureau of Labor Statistics comes and says, oh, well, after the fact, those jobs have actually been revised into non-existence. I believe the U.S. economy and the labor market are both in recession today. What
is your outlook then for the labor market, either in the short term or long term?
Well, I think we're in the middle of a process of what this recession is going to be. We're seeing a lot of offshoring of positions. We're also seeing a lot of artificial intelligence replacing warm working bodies. And I don't think that we're all the way through this process yet. And it's one of the reasons I think that voters are so very disgruntled right now with the current administration, because it really does come down to what political analyst James Carville said years ago. It's the economy, stupid. And that really is creating a lot of stress for U.S. households right now.
Okay, Danielle, just one more question here. If the U.S. Central Bank does indeed cut interest rates either once or twice this year, in addition to the slowdown of its reduction in its balance sheet, I mean, is that going to help the economy?
Well, it will eventually help, but the same way that there's a lag effect when the Fed is raising interest rates, there's going to be a lag effect from the time the Fed begins to cut rates. But there's certainly now going to be at least more discussion about it, because the Fed's year-end target for the unemployment rate was 4%. Here's the news. They hit that a half a year earlier than they had expected.
All right. Thank you so much for your time today, Danielle.
Thank you for having me.
And GameStop shares today dropping whopping 40% after putting out a lackluster earnings report and announcing a share sale. Also, their most famous meme stock hero, Roaring Kitty, had his first live stream in 3 years. Let's go to NTD Sean Marshall now, who tells us what happened.
Keith Gill, also known as Roaring Kitty, live streamed on YouTube today for the first time in 3 years. Roaring Kitty's recent cryptic meme posts on social media after the long breaks have attracted much attention to the GameStop meme stock craze of the past couple years.
I see over the past couple of years, I see an overemphasis on like that legacy business, and it's just there's no it matters. It's not that it doesn't matter, of course, but they're in the transformation stage here, and what could they transform into? You know what I mean? There's a lot of question marks about that, understandably so. But essentially it becomes at this stage of that second part of the analysis, this transformation part, it becomes a bet on the management.
While many investors waited to tune in to Gill's live stream, the gaming retailer posted its latest financial report 4 days ahead of schedule. Net sales were down 28% in the first quarter, or $882 million, compared to $1.2 billion in the prior year's first quarter.
If you look at the company, it's not a good business. They're losing $200 million a year. The revenues are not growing in an economy that is growing. So what I ask a lot of people, I do these informal surveys. When was the last time you went to GameStop? And when are you going to go back? And for what reason? You don't get good answers to that question.
Over 500,000 watchers tuned into the live stream, with the stock being halted multiple times on both the NASDAQ and the New York Stock Exchange before and during the stream.
I think it's halted. I think it's halted again. It's halted.
Gill kept throwing out disclaimers throughout his discussion, telling viewers they could lose it all, and that his style of investing doesn't work for everyone. GameStop has not earned a profit since February 2018 due to the gaming industry's shift to online gaming sales. The company said earlier it would sell up to 75 million shares, but did not give more details on the timing. Wedbush analyst Michael Paxter has said they are taking advantage of the recent spike in share price to issue shares. which is a prudent move that takes advantage of the frenzy created by Roaring Kitty. Sean Marshall, NTD News.
And also worth mentioning on that, investors had exchanged over $8 billion worth of GameStop shares as of early afternoon today. That's more than any other stock on Wall Street except for Nvidia. This is according to ALSEC data. All right, moving on from that. A workers' union at Samsung Electronics staged a walkout today over demands for better pay. It's actually the first such walkout in the smartphone and chip-making giant's 55-year history. So the one-day strike comes after failed negotiations over pay and bonus agreements. The nationwide Samsung Electronics Union has 28,000 members, under a quarter of the company's total workforce in the country. So a Samsung spokesperson said that there is no impact on production and management activities. Meanwhile, car makers are struggling to sell their electric vehicles. Now some are turning to Costco wholesale to help with the problem. Here's the story.
Unsold electric vehicles are piling up as carmakers struggle to sell them. Some are using the Costco Auto program to help. It connects shoppers with dealers to arrange sales of new and pre-owned cars with prearranged pricing and potential discounts.
Their auto program can be hit and miss. If you walk into a dealer and you say, listen, I can get an additional $1,000 discount on this Chevy Blazer EV if I buy it through Costco, what can you do for me? And you'll find that the dealer might say, I'll give you $1,200.
Automotive expert Lauren Fix says to find the lowest price, using Costco's price as a bargaining chip. It may not be the lowest you could pay. Costco says it updates prices every month to make sure they're competitive. The company has facilitated an average of over 500,000 car sales annually over the past 5 years. In 2023, 7% of requests were for electric vehicles. But EV sales are still struggling. Out of all cars sold in 2023, only 7.6% were all electric.
They don't like the restrictions of the charging network, having to charge at home, can't go on long road trips. There's too many stops. The cost of insurance is higher. The cost of the vehicle is higher.
For those looking for an EV, Fix says, check if there's a fast charging station in your area. Contact your insurance agent to learn what the rates are and check out available discounts.
And staying on the automotive industry, is now a good time to buy a used car? Manheim, the world's largest used vehicle marketplace, has just released its latest report on used car markets. Jeremy Robb, Senior Director of Economic and Industry Insights at Cox Automotive, helps us break down the report. Cox Automotive, by the way, owns Manheim. Jeremy, thank you so much for your time today. The Manheim Used Vehicle Index released today. So to start off, just give us an overview here. What are some of the key points?
Yeah, thanks for having me here. The Manheim Index, has been around for a long time. It's probably one of the broadest measures used for the used vehicle automotive market to measure values over a long period of time. We have new cars that enter into that index every year and month and get measured. So when values went crazy and new car supply was really curtailed in 2021 and 2022, that moved the index a lot higher. And then as we've seen new car production and sales come back online, especially in 2023 and this year in 2024, there's been more new car supply out there, and that's taken the pressure off of people looking at used cars too. So we have several things that kind of impact the index. One is the new car side. The other one is just supply demand overall for used vehicle values and what normally happens. Tax return season is a big driver to get people to come into the market to purchase a used vehicle. And tax return season, the impact that we felt this year was a little bit more muted than what we normally feel. So that's also been one of the things that's really contributed to some of the declines we saw, especially in April, and then how that continued into May.
So Jeremy, the index has been on a downward trend, it seems like, since around January 2022. Anything to be said about that? Yeah,
I think you have to put that in historical context. You're totally right. It has been on a downward trend since then. but we went on a really crazy upward trend in late 2020 and 2021 until we got there. So actually, at this point, we're getting back towards where our normal long-term, overall average gets to. So as we kind of went much higher, and now we've come back off. When you look at our long-term trends over the last 20 years, and we have an inflationary bias in the Manheim Used Index because new cars, generally, those prices have been higher every year for many years, and that keeps a little bit of about a 2% inflation bias in the index. But we've come down over the past couple of years, and a lot of that just means we've come back to closer to where our longer-term averages would be outside of the pre-COVID era.
And maybe just wrapping up here, do you think it's a good time to be in the market for a used car right now? I know it's all relative, but what are your thoughts here?
Yeah, that's a great point. Used vehicle prices overall right now are down about 6% year over year, and we're down over the last couple of years, but we're still up versus where we were in pre-pandemic timeframes. So if you go to buy a vehicle and you haven't purchased a car since 2019, you're likely going to be shocked at the prices of that car, but they are down relative to where they were a year or so ago. If you need to finance a vehicle, interest rates are still really high for loans and APR on a loan to finance a new or a used vehicle. That does keep a lot of consumers at bay. They don't want to pay 12, 13% interest on that used loan that we're seeing out there. So that can be a factor as well. But they're much more affordable than they were a year or two ago because prices have come down. And we're likely to see prices continue to normalize. It's normal for vehicle values and prices to decline over time, but probably at a lesser extent than we saw in 2022 and 2023.
All right, a good note to end here. Appreciate your time today, Jeremy.
Thanks for having me.
Also a good note to take a break now, but coming up, Russian President Putin says nearly 40% of the country's trade is now conducted in rubles, and Western currencies have decreased by half. And the U.S. middle class is shrinking. The number of Americans falling toward poverty is on the rise. We'll tell you more about it after the break. And welcome back. Some quick headlines now. Microsoft said that a new feature takes screenshots of what you're doing on your computer every few seconds will be turned off by default. The feature comes with its PCs that has AI capability called the Copilot Plus PCs. This comes amid a slew of criticisms from security and privacy experts. And Spirit Airline is not considering a Chapter 11 bankruptcy. Its CEO said this at the annual shareholder meeting today. Ted Christie also said that he is encouraged by the plan it has in place right now after its deal with JetBlue Airways fell through. This comes as the company continues to reel from the grounding of several of its aircraft. And Netflix is fighting a multi-million-dollar claim in connection with the global hit Baby Reindeer. The miniseries, created by comedian Richard Gadd, recounts Gadd's story of being stalked by a woman. Scottish woman Fiona Harvey alleges she was the real-life inspiration for the show and that the show ruined her life. She is seeking $170 million in damages. Netflix says it's going to defend itself. And Russian President Vladimir Putin said earlier today that nearly 40% of the country's trade now conducted in rubles. He said this while addressing the St. Petersburg International Economic Forum. He also said that Russia wants to increase the use of currencies from BRICS countries. This is a group of emerging markets, including Brazil, Russia, India, China, and South Africa. Putin highlighted that payments for Russian exports in Western currencies had decreased by half over the past year. And thanks to inflation and other factors, many middle-class Americans say they're being financially squeezed. Here's what's happening and why.
The U.S.'s middle class is getting smaller, and the number of Americans falling toward poverty is on the rise.
Most people have seen their wages go up, their earnings go up over time, but they're not enough to compensate for the higher prices.
According to a recent report from the Pew Research Center, in 1971, 61% of the nation was middle class. As of 2023, that number dropped to 51%.
Just try not to eat out as much. I kind of realized pretty quickly that that's unsustainable, so just trying to make some more meals at home.
Pew researchers define middle class as having a total income at least 2/3 to twice as much as the median household. And analysts say things like the monthly bill at the grocery store,
I have seen it increase, definitely,
to sky-high interest rates and persistent inflation has more middle-class Americans keeping a tighter grip on their wallets.
People are now having to realize, and they always do, but I think even more so, they have to make choices. We're seeing that in the marketplace.
The report from Pew Research also says when adjusted for inflation, all classes had incomes that were higher in 2022 than in 1970. But the increases for those in the middle and lower brackets were much lower than the upper class.
And finally, many film fans love movie marathons, and that is to getting to watch a series of film one after another in a theater. But what if you don't have a whole day and night to spare? An upcoming movie marathon spreads the films over 3 days and gives you 3 different weekends to see them. Here's more on that.
Ring has awoken. Sauron needs only this ring to cover all the lands of darkness. Must I do?
You don't have to venture to Mordor to see the extended editions of the Lord of the Rings trilogy in theaters.
You have my sword, my bow, and my axe.
The Fellowship of the Ring, winner of 4 Academy Awards, returns to select theaters the next 3 Saturdays, June 8th, 15th, and 22nd.
Who now has the strength to stand against Isengard and Mordor? The union of the 2 towers.
War comes to Middle-earth in the second film, The Two Towers, which appropriately won 2 Academy Awards. It follows Fellowship, screening on 3 straight Sundays, June 9th, 16th, and 23rd.
Come, master. Come to speak.
It is time. The crownless again shall be king.
Become who you are born to be.
Finally, The Return of the King, winner of 11 Academy Awards, including Best Picture, brings the marathon and the trilogy to a triumphant conclusion on 3 consecutive Mondays, June 10th, 17th, and 24th. FathomEvents.com has theater and showtime info, and don't forget your tickets, otherwise...
All right, and that's all the stories we have for you today. Thank you very much for watching. If you have any feedback for the episode, please feel free to let me know. You can email us at business@ntd.com or leave a comment online. I do read them. And for the last time this week, Business Matters. Goodbye.